This is the Money Seed Podcast, where we discuss all things investing, plain and simple, the way it should be. Please remember, this show is for educational and entertainment purposes only and is not intended to be investment advice. Welcome back to the Money Seed Podcast. Today, I'm honored to host Mr. Richard Friesen. Richard is a psychologist turned financial trader, turned CEO of the Mind Muscles Academy. Now, Richard does a lot of financial coaching with various clients. And Richard recently wrote the book, A Private Conversation with Money, 10 Keys to Financial Freedom. Richard, welcome to the show.
Well, it's so good to be here. I've been, just beforehand, I was listening to some of your podcasts and really appreciate the informational, the flow, and the ability to just see things the way they are versus putting a lot of spin on them. So my appreciations.
Yeah, thanks for the kind words. I appreciate that. So Richard, I think your background is quite fascinating. You have a degree in psychology. It might even be 2 degrees. So tell us, what is it that led you to psychology and how did you transition from psychology to the financial world?
You want to know the truth?
Yes.
What led me to psychology, just like most therapists, was to heal myself. Oh my gosh. We have a vision of helping the world and saving souls, and that is the external reason we give. But for most of us, we're especially people who have experienced pain, we look to save others or help others or deliver value to others. And in that process, oftentimes we find ourselves being more aware of what's going on, accepting ourselves, and from that, creating more agency.
Got it. And so you went down that path and you learned all about psychology. And at some point, something must have happened and you ended up becoming a trader.
Yeah, when I graduated with a master's degree in clinical psychology and was a therapist in San Rafael, California, just north of the Golden Gate Bridge, there at that time, the whole world had graduated like a million wannabe therapists, and the competition wasn't there. And I had a friend who said, hey, why don't you come trade in Chicago and work for us there? So I decided to get my education first. I went to work for Merrill Lynch and then eventually did go to Chicago.
And did you have a mathematical mind? Or do you need a special kind of mindset to be a successful trader?
Oh boy. I now work with traders and I've read over 2,000 assessments of traders, that assessment that I've created. I've coached dozens of traders. I've had groups of traders. And your question is really prescient because it does take a mindset, but it's not necessarily a mathematical, an engineering mindset. There's something different. I can almost smell with a new client whether or not they're going to be successful. And there's something, I haven't quite defined it completely, but it has to do with curiosity, interest in what you're doing, process versus outcome, self-acceptance, and a real drive to learn and to grow.
And Richard, you were in the financial world as a trader / investor for a good 2 decades, which that tells me you were most likely successful at it. What do you think were some of your habits or traits that led to 2 decades of success?
Well, I think I'll tell you a story that would explain that the best. It was April of 1995, middle of the night, sound asleep, and I heard a voice. And the voice said, Rich, you're only worth $200,000. I woke up, looked around the room. Wife was still sleeping. Nobody was there. So I got up, dressed, dressed, and drove to the floor of the Pacific Stock Exchange, where I was an independent market maker on the floor of the exchange. I got there so early, the doors weren't open yet. So at that time, the Pacific Exchange had these big columns and these concrete steps. And I sat on the steps and I thought about that voice. And I realized that there was something going on in terms of my own worthiness. To give you a little bit of background, I worked for a large arbitrage firm out of Chicago. They had hundreds of millions of dollars of capital. They had PhD quants, mathematicians, engineers, all giving us information so that we could make buy-sell decisions. When I went on my own, there was none of that. It was just me, philosophy major, Rich Friesen. And so the first year I was very careful. I made 125,000. Next year, very careful, 150, 175, then 200, and then 200 again. And that brings us to April of 95. And what happened was I was trading Micron options. And Micron had just at that time just took off. Mm-hmm. Money poured in. Firms were selling premium. The retail was buying premium. I made $200,000 in the first 6 weeks. And then, up and down, make it, lose it, make it, lose it. And that's when I heard that voice. And so what I did is, most of the people don't understand how pits work because they don't even exist anymore. But I normally, very quietly, shyly, I would stand in the back of the pit and pick at little orders here and there. So I went and I stood right in the front of the pit, right in front of the order book officials, in between where the two busiest brokers stood. Now, of course, that spot isn't owned by anybody. You don't rent it. It's managed by the guy who's the most aggressive, the most capital, the meanest, the social top of the social hierarchy. And you've been in social hierarchies. You know that there's some people who just command that spot. Well, I stood there. So the rest of the market makers started coming in, the brokers started coming in, and the guy who always stood there kind of looked at me, looked at the clock, looked at me. The bell was about to go off, and he tapped me on the shoulder, as if to say, my spot. And I didn't move. The whole pit just kind of was pushing match ensued, and the order book official said, $10,000 fine each if you get into a fight. So the bell went off, and timid Rich Friesen, all of a sudden, I'm going to get back from the mic. I just went, buy 100, sell you 20, buy 30. Every option series that opened, I was buying and selling, and I went on to make many times that $200,000, got enough capital, and started building a trading firm. So what you pointed to, what are the criteria? One of the basic is worthiness. And I have clients who come to me that are successful, they've in other businesses, but there's something down deep that says, you're not worthy.
And when you developed this, do you call it being brave, or is it self-confidence? What was it?
Well, you're asking the exact right question. That accidental voice that I didn't create, I would have gone on forever if I hadn't heard it. Can we do something like that intentionally? And when I started hiring traders, about a third of them would I had a methodology by that time. I had a binder like this, how to trade options. And the third of them would just take off of that methodology. Another third would just kind of go along. They'd be good. Okay, low risk. But a third of them just didn't make it. And then it occurred to me, what if they have some underlying psychological issue like I did? So I brought in a hypnotherapist, and we discovered that, for example, one trader had grown up with a badly handicapped younger brother. And as a result, he felt resentful because the younger brother got all the attention. And if he made money, his mom would come to him, say, you got to take care of your younger brother. Well, how do you handle that? No problem. You just don't make money. Or another trader grew up dirt poor in West Virginia, very bright guy. And if he made money, uncles, cousins, brothers, sisters, a whole community of people who were so used to poverty, they couldn't imagine another context or another world. If he stepped into wealth, he would then be ostracized in his community. And as you know, that evolutionarily speaking, on the savannas of Africa, if we lost our tribe, we died. So I think there's a built-in need to stay connected, which brings us to, I think, a bigger point about our belief systems. that oftentimes we hold on to beliefs just to belong.
Absolutely. I think the desire to belong to a group and to gain the acceptance and the approval of that group is very, very strong.
Oh, yeah.
Yeah, it's absolutely. So here's a question for you. Going back to that day when you woke up in the middle of the night, someone could say, but Richard, if you were playing it safe, making 100, 150, hundreds, 200,000, a year, that was a fantastic salary in the 1990s. Why take all that risk? Why take it up a notch and go through all the stress and the pain and the trouble?
Well, actually, what I was doing was taking a lot of risk. In other words, there was all this opportunity there. And if you don't advance, then something can take you out. You get caught in a short option position. The market collapses. In fact, I have some stories about that. But that is the riskiest position because like playing the roulette wheel or something, eventually your color isn't going to come up. So by making and getting really aggressive and taking advantage of everything, actually the risk was going down.
Interesting. So you mitigated risk by going a little bit bigger, but bigger in a smart way.
Yes, the methodology was still there. I didn't change the methodology. I didn't get cocky. I didn't think, like a lot of guys on the floor, about, I'd say, a quarter of them every year would get blown out. And the usual pattern is, and this is a pattern with my traders and my entrepreneurs, do well, do well, do well, do well, up, 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 follow the process, disciplined, systematic, and then something happens. There's some discomfort up here. Something of that, like I had that voice, and boom, we go down suddenly and sharply with either our equity curve as a trader, or I have a client who built a small HVAC business, and he built it intentionally to sell it to a larger company. He knew their criteria. He knew what they needed, just everything. So he just focused on that. They got interested. They were negotiating. And what did he do? Started sabotaging the negotiations with trivial stuff that just didn't matter. So when we worked on it, again, his issues were different than mine, but for him to actually be successful was so far out, even though he imagined it, even though he planned for it, that he managed to sabotage it or to start sabotaging it. But we got that fixed. He sold it. And now working on what is my meaning in life now that I have enough money, I don't have to worry about it. What do I care about and what matters to me?
Makes sense. And was that some of the impetus behind you leaving the trading floor and starting the Mind Muscles Academy?
Yeah, well, the trading floor, I saw it was over. I knew it. And in fact, I led a revolt on the floor to turn the floor into an all electronic exchange. I lost the vote. And so then I went and started a software company, ePit Systems, to capitalize on electronic trading. That was the biggest kick in the teeth because we were close to cash flow. The dot-com crash happened and boom, all our customers it's like 1 week they were asking for more function. The next week they weren't answering their phones. Mm-hmm. So that was really hard. And Rich Friesen just kind of picks up and keeps going. But looking back, I think I spent about a year in depression. And I, at that time, was not really aware of it because my hopes, my dreams, I had pitted everything on this and going public, and it was this close. So I look at the stress in my life, the stress on my relationships, and I look back on it and I realized how much I had tied up in that dream.
Interesting. I mean, I didn't want to bring it up, but I'm kind of glad you did about depression. It's very surprising for me to hear that you almost didn't know it for about a year, or you had maybe a hard time recognizing it, and yet you have the professional background to recognize it.
I mean, physician, heal thyself. Oh my gosh, therapists are the worst. Yeah, well. It's sort of like my view of myself as the guy that just bounces and I just keep going and keep going. And it's like Coyote, who's running out over the cliff. And all of a sudden looks down. Oh, shoot. and down he goes. So it took me quite a while to work out of that. And I think even now I find there are still some remnants, energy draining remnants of that left.
And what advice would you offer somebody who is in a similar position where they lost a lot of money or they had a business or a big investment that went south? What advice would you give them?
Right from this point, I don't think there is much just advice. We're looking at, everything from a severe trauma to a problem in life. And what I do with my clients is I start with what I call the golden keys: awareness, acceptance, and then agency. So in the awareness, so this isn't really advice, but it's a good exercise. In fact, I'll do it right now. And we have the set score: sensations, emotions, and thoughts on awareness. So I'll just go through, and my stomach's a little tight. My muscles are tight. My voice is a little tighter. My voice is a little tighter than it normally is because I'm kind of excited. So I do my sensations. Emotionally, I'm pretty excited. I'm happy to be here. This is a lot of fun. Your questions are the real hard questions, but they're the right hard questions. My thought process is just processing language to communicate what I'm doing. So we start with sensations, emotions, thoughts, and then next is acceptance. Now, if I were to say, Rich, when you're doing an interview, your voice shouldn't be so tight. I'll say, oh, that's interesting. Okay, now as an agent, how would I like to experience my voice? So sensations, my emotions I'm feeling, my thoughts with acceptance, then we can start to look at what would I like next.
I see. Makes sense. And Richard, tell me a little bit more about your clients. Where do you, where do you start with your clients, and maybe what type of clients tend to reach out to you?
Yeah, the clients that reach out to me who are dedicated to success and have repeated behavioral belief and identity patterns that no longer serve them. And they're smart, they've had some successes in their life, and they're stuck. And specifically, they're stuck around their worthiness, their behaviors, or belief systems. So we go through all that. I have an application called Mind Metrics. And the Mind Metrics, what we do is we measure their physical sensations, emotions, and thoughts, and they just click little colored dots to bring them up. We look at any behaviors that they have that no longer serve them, and we look at behaviors they want, and we just go down. And then when we get stuck somewhere or we're repeating a behavior, then we go into it. And one of the things that I've never heard of anybody else doing is I have them exaggerate the negative thoughts. I exaggerate the emotions. I exaggerate the physical sensations. On a scale of 1 to 10, how intense is this? It's a 6. What thought would you have that would bring it up to an 8? Oh, I think about my dad saying you're worthless. Bring it up to an 8. What thought would bring it up to a 10? There's another thought. Okay, let's really feel it, exaggerate it. Oh, how's it feel? What's going on? And then I have them take a breath, physically step out of that. Now, what would you like to experience? Okay, then they'll give me an experience. I'd like to be in the flow. Like to be relaxed. I'd like to be confident. I'd like to take everything as it comes and not worry. Fine. Now step back. What thought? Oh, my dad says you're a jerk and you'll never make it. Okay, think the thought, and we go back and forth 4 or 5 times until they just start laughing at the ludicrousness of it. But what we've done is by experiencing that behavior, that thought, that process that no longer serves them and exaggerating it, we now know how to do it. In other words, before it was kind of a subconscious process. Now we know how to do it intentionally. Now we also know how to step out of it, how to step into it. So what we've done now is we've created some agency, a higher level that isn't, when we're in this process, it isn't just a process. Oh, I've created this process. I've created this experience and I know how to do it. So what we're really doing, and the secret is we're developing agency, the ability to choose our experience.
Fascinating. I want to touch a little bit upon the example you gave about the father. My father said I would never make whatever. Do you find that quite often with your traders that they have childhood memories or the style of upbringing that they were under that actually affects them as business people and traders as adults?
Absolutely. I was being interviewed in a podcast this morning, and I invited the interviewer, you want to do a quick set score, sensations, emotions, thought. And so he said, my fists are tight. Okay. This is the faster version of it, but can I speak to your fists if they understand that they have a positive intent? And the fist said, I've got to fight. I got to strike first. I got to be there. I got to protect Joe. I can't let anybody get at him. When did you come to Joe? How old was he? He was 2. When he was 2, he had to fight for everything. He had to fight for food. He had to fight for attention. He had to fight to be safe. And so I've been there and I've been protecting him. So then what we do is we say, okay, that's a real positive intent. When he was younger, he had no other alternative. Is that right? Right. Okay, so let's look at see what's your positive intent. So we drill down. And we drill down several levels till we get to that really heartfelt positive intent. If I start crying, I know that we're right at that core. So now I say, okay, so that worked in the past. How would you like to be in the future and help Joe? And often it'll be, oh my God, I'll just let him relax. It's so exhausting to have to always be, tense and alert and get ready for a fight. Oh my gosh. Okay. So can you still be ready for a fight if that's the context that's needed? Sure. Okay. And you can relax the rest of the time. Okay. So there's a whole bunch of details to work out. But the end result is that the interviewer said, oh my God, I feel like this burden coming off of my shoulder because I've just always been this way.
And do you find that there are patterns between clients or things that you see come up very often that a lot of people are held back by?
Yeah. What I do is I have a kind of a triangle, and the top of the triangle is knowledge. Then we have skills. Then we have beliefs. Then we have we have behaviors, and below that we have beliefs. Then we have our identity. We can even go down to spirituality. So we look and see, it could be just a knowledge problem. It could be a skill problem. It could be how you believe about the world and yourself. It could be a behavioral issue, just a habit that you've formed over the years. Or it could be, like in my case, I wasn't worthy. So we can work down that to find out what level we need to really focus on.
And do you see, for example, a lot of your clients are stuck at a certain level, or do you see, whether it be overcoming self-doubt or whether it's childhood trauma, or what are some of the things that come up more than others?
I think there's a lot of, the identity absorbs a lot of it. But sometimes if we just shift some behaviors, the identity will say, oh my gosh, look, we're doing this new behavior. I guess I changed my identity. And sometimes there's really traumas that's been quarantined. So it's really so individualistic. I don't know that if I can create a generalization. But again, it just starts with awareness. I'll pay attention to the physiology, when they blink, where their eyes go, if I can see their heartbeat in their neck. And I just look for the place that has energy to it, emotion to it. And then we go there. I'm kind of fearless. I'm not afraid of holding somebody by the hand and being with them wherever they need to go.
That's powerful. It's funny, a bit of a segue that reminds me of, there's a TV show on Amazon Prime right now called Billions. I don't know. Are you familiar with it?
Yeah,
And
I was quoted in Forbes magazine on my comments on the show.
You're kidding. You
No.
are kidding. I'm going to have to look that up. It's
Oh,
funny
not
because
Forbes, it was Fortune. I'm sorry, Fortune magazine.
Amazing. Absolutely amazing. Yeah. Well, now it's going to sound like it's scripted, but to somebody viewing this show, but that character who is the therapist for the hedge fund, and every time a trader has a bad run or a trader is going through some difficult times, they go see the therapist. She's basically an employee of the firm. She has her own office, and the traders go in, the trader talks to them, and next thing you know, the trader's confidence and mojo is right back to the top, and they're successful again. That you sound like you're that kind of a character.
Well, I would like to think so. I have worked for firms and have had that position. And honestly, it's been a real challenge because the traders, when they come to me independently, they say, Rich, I've got a problem and I'm willing to go wherever it takes. In the firm, what they're concerned about is my quarter's trading earnings going to be okay? How does everyone look at me? Are they going to think I'm weak if I'm seeing you? There is so much, I dropped the word, just how they look is so important, and that's in trading firms, that's a real vicious place, man. That's the jungle. And so as a result, to come in and really to let down the guard and really become aware is more of a challenge. Now, it's still helpful because I can help them on the knowledge, skill, and behavioral level, but it's much more challenging for them to get down to the beliefs and the identity.
Absolutely. I always imagined, I've never been in one of those environments, although I do have a mathematical background. I have an engineering background. Now I work here in Silicon Valley in tech. And there are certain environments, and I imagine the finance world to be one of those that attracts type A, hyper-competitive individuals.
Yep. Oh, boy.
Yep.
No kidding.
So no, I can understand where you're coming from. Absolutely. And so you have this experience, the education, the experience on the floor. You've been working with your clients, and then you write the book, right? A Private Conversation with Money. Tell us a little bit about the book. Why did you write it, and what can people learn from the book?
Well, if we look at the cultural shifts that our kids are being absorbed, I've got 6 grandkids, and I look at the world they're growing up with, and I really want to make the world better. And by that is allow them to have the choices, as many choices on their life's menu as possible. And I see a real cultural conflict around money, wealth, and success. On one hand, we go to TV and movies, and all the wealthy people are portrayed, as something we would all want, with the big houses, the cars, the vacations, the yachts, and all that. And on the other hand, we've got the 1%, the wealth is evil, they're not paying their fair share, they're screwing the workers, they're screwing their clients, and I am not going to be part of it because I believe in social justice and fairness. So we have also the upbringing from our parents. For some, whoopee, money just comes, and whoopee, it just goes. For others, we ain't spending a penny, and we're dying with $2 million in our retirement account. We're not spending a penny. Money doesn't grow on trees. Money is the root of evil. You don't deserve it, and you have all those things. So now we've got all these internal conflicts, and that stress then around if we're not really clean about it. So that's why I wrote the book. And what I do in the book is I retitle money as a certificate of appreciation. If you do something for me, and I say, wow, that's really worth more than the certificates of appreciation I'm giving you. Wow. And you can say, he's given me these certificates of appreciation for what I'm doing for him. And so I have even an exercise where, although there's not as much cash or transactions as possible, when you give people money, if you can, you say, thank you. This is a certificate of appreciation for what you've done for me. And a lot of people say, oh, that's sweet. That's really nice. But then I push it to the next level. The more certificates of appreciation you collect, the more value you have delivered to others. Oh, My gosh. So I'm removing wealth from the one pie model where there's so much money to go around. They have more than their fair share, to one of delivering value. I mean, imagine what if everyone in the world woke up tomorrow and said, how can I deliver more value to my family, my customers, my employer, my employees, my clients, customers? And that was what was on our mind. Do I need more knowledge, skills? Do I need to change my behaviors? How much value could be delivered in this world to make our experience of life better? Wow.
Yeah, I think that's a very good way to phrase it, because I think there's this challenge where a lot of people in our society don't, or I shouldn't say that, a lot of people in our society want money for the sake of money, right? Like we have an idea, as you mentioned, oh, if I have money, I can buy a cool car, I can buy a mansion, I can go to Hawaii every year, etc. And then what's beyond that? Because somebody can acquire that with, say, I don't know, $5 or $10 million of net worth, or maybe even less than that. But then what's beyond it? And so there's almost, getting back to the society, there's almost this societal hatred toward anybody who's ultra wealthy, right? I mean, I don't think I ever hear anything nice about a billionaire, right? There's something just genuinely evil about billionaires, right?
Oh yeah.
And how do you? And I think that's one way you can bridge that gap, is say, look, it's not about the dollar bills, it's about delivering value. Yeah, I think that's a very powerful way to
that's a major reframe. And once you do that, then you can. Now, I just got to say that there are people that cheat. There's fraud. We've just seen a big part of that with SBF. There's and companies that cut corners. There's all that going on. But there's also a tremendous amount of value being delivered. My guess is the amount of honest value delivered to the amount of fraud and cheating might be 100 to 1 or something. I don't have any way of measuring it, but it's huge. I mean, I look at my life and I look at their transactions and I look at the ones that are not satisfactory. And my gosh, it's 100 to 1 maybe. And so the value that I receive, I give the certificates of appreciation. And what you brought up is, if you're trying to use money to fill what I call a hole in the heart, and that is, I'm not worthy, but I'm going to prove it to everybody by making a lot of money and having fancy things, or I'm going to be able to show them who I am, I'm going to feel worthwhile, or I'm going to fill my life with pleasure and cocaine and hot spouses and all that stuff. If we're trying to fill that empty spot in our heart, as you well know, like any addiction, you get that high and then kaboom, and then you need another one and another one. And eventually, as we've seen in many people who have a lot of money, eventually their life goes downhill.
Richard, do you have any particular individuals who are wealthy or successful that you think are good role models?
Yeah, my former employer at Chicago Research and Trading, Joe Ritchie, he passed about a year ago. But man, he had hundreds of millions of capital. He was in Africa talking to the heads of the different countries there. I went to his memorial service, and there were people from Africa and all over the world who had been touched by him. He was a process man. In fact, in options, he didn't read a book on options and built an option trading firm simply because he had the brilliance to say, what's really going on here? And he rewrote option valuation. And so he saw some of the pain and suffering in some of these countries and said, oh, is there somebody I can talk to and make a suggestion and work with them and provide my capital? And so he's really made a difference in the world. There must have been 400 people at his memorial service who had been touched by him. So not only did he make a lot of money by providing a service by better option valuation, but he took that capital. I tell a story about, what if we all woke up tomorrow morning and we all had $20 in our pocket? What is our concern?
You mean that was our net worth?
That's it.
Okay.
That's all we have.
$20. Yeah.
$20. We're looking for food, water, and shelter.
That's it. Yeah. The base of Maslow's hierarchy of needs: shelter, and food, and security. Yeah.
Now you have 100 million in your pocket. You can plant orchards. You can do research and development that might not come around for cancer treatment for 20 years. You can look way into the future. So capital accumulation has been a no-no, but capital accumulation is there for our kids, our grandkids, and maybe even great-grandkids. The less capital accumulation, the more short-sighted we are, the more the long-term we can do. Now, a lot of people, some wealthy people with a lot of capital aren't oriented that way. Okay, but it does allow a number of people to make a difference.
That's a good way to describe it. Yeah. Having capital allows you to plan further into the future as opposed to just being stuck in survival mode.
Exactly.
Yeah, absolutely. And Richard, can you maybe give some advice? I know that financial advice is always hard to go on by, but let's say somebody is just at a point in their life, let's say in their 30s, when they're first starting to take their personal finances seriously, they're first starting to think about retirement. What are some of the ways they should be looking at to build capital? Is it stocks? Is it real estate? Is it, some of the other alternative investments, crypto or options? Or what do you think people should try to look at? Not like the average person here.
Oh my gosh. Normally I have a sense of diversity and the usual litany that a financial advisor would give you. But I'm looking at the overextended debt of the federal government, the state governments, pension funds, Social Security, Medicare. I'm looking at the massive amount of debt that we have that is, $100,000 per person in the U.S. There's no way that we can fundamentally repay it. Can we dig ourselves out of that hole? What kind of future do we invest in stocks? I mean, I look at my own portfolio, diversified, gold, different natural resources, service companies, things that should do well in a recession, and cryptocurrencies. And I'm looking at this diversity. And rather than this, I'm getting this. For those of you listening on audio, both of my hands are going down. So right now, I've got some clients, and I'm saying, I don't know. And there's a possibility the wheels could come off. But on the other hand, Americans are so tremendously creative. When a problem's actually there and everyone says, okay, we tend to solve those things. And if I look at everywhere else in the world, I'm staying in America.
I'm with you all the way. Getting back to that comment about, both your hands going down, I think that there's a saying that during a crash, everything correlates, right? So even if someone's diversified and you got gold and oil, but if there's some kind of a dramatic market downturn, there's a bit of a crash, it's all going to correlate and it's all going to go down for a period of time.
Yep.
That's just how it goes.
Yep. In fact, I heard one of your podcasts that talked about buying Citibank at like 80 cents or something like that.
That was me. That was
you. Well, goodbye.
It was a good buy and a terrible sell, and that was one of those things. I mean, that was in the 2008, 2009 financial crisis. And I bought Citibank for 80 cents a share, and I bought 1,000 shares for like $800. And that was around like 11 o'clock in the morning. I was I was living in the Midwest at the time. And so 2 or 3 hours later, just before the market closes, I sold it and I doubled my money. And I remember going home that day from work, thinking I'm a genius. I'm the smartest guy in the world. I just doubled my money. I made $800 in one day. I'm an absolute genius. And as it turns out, of course, that was a horrible, horrible decision.
Well, you can't judge the decision by hindsight. You have to judge it by the process at the time. We all do that. If let's say you hadn't sold it and it took another dip down to 50 cents, some horrible news came out, you would then kick yourself for not having sold it. So you have a process. Now, I did the same thing with bonds at the absolute bottom of the bond market in 81, 82. I bought the absolute bottom, and 2 days later, I sold. Oh, but I was so naive and young at that time.
We all live and learn, right? That's how we become better, is we make these And whether it's a mistake or not, I mean, I like the framing of the process, because if you develop process, that's something you can repeat. That's something you can fine tune. Whereas using emotions is probably not the way you want to go long term.
Yeah, it's really a challenge. The active traders I have, they say, I don't want to be emotional. But it turns out neuroscience tell us that emotions is how we make decisions. If you freeze the emotional part of the brain or it's damaged, you can't make a decision. So the question then is, how do we make decisions with awareness and with our emotions? And this comes back to the word I use a lot, is agency. Oh my gosh, my stomach's tight. I'm feeling tense. Now, normally I just react, kaboom. And I can say, okay, I've got this experience. How do I want to make a decision? So again, if we can get our awareness above our emotions and have our agency, the ability to make decisions from a higher place, we can fully accept our emotions, know that they're there, and then proceed from a higher place and from agency.
And quick question, Richard, back when you were an active trader, how many trades did you make per day or per week?
Oh my gosh, it varied, but it could have been a couple, 300 trades a day sometimes.
Wow.
But you got to understand, I was a market maker. I was required on the floor to take the other side of every trade that came in. So I could price the trade. So it's really, you were just buying and selling all day long. So it wasn't like I was an investor making trading decisions. I was a market maker just taking the other side of orders as they came in.
I see. Okay. Because my follow-on question was going to be, did it ever become easier on an emotional level? But maybe if you were a market maker, you didn't have that emotion as an investor would.
No, there's no attachment to any trade. In fact, I have short-term memory problems. Had it back then. And then I remember at one point there was this spread that came in, option spread, and it looked really rich, really expensive. And I had a bunch of them. And so I just sold. The market maker next to me says, "Do you realize you bought that for $250 and you just sold it for $7?" Well, okay, if you say so. It was a process. In other words, I'm not buying something to sell for higher. I have a process of looking at valuations, buying what's below and selling what's above.
Richard, briefly getting back to that thing you mentioned a few minutes ago about the culture, right? Especially the way children are taught about money, and just the way current culture maybe is teaching some negative ideas about capitalism to children, etc. Do you offer any parenting advice, or how do you talk to your grandchildren, I guess now, about money?
Oh, it's funny you should ask. This was yesterday. My youngest son, wife, and 3 boys, ages 6 down to 2.5, all went out to a park near here. They cooked caramel popcorn with my wife, put them in these little plastic bags, did a lot of work, set out a card table, and sold about $25 worth of stuff.
Nice.
Yeah. And my kids remarked that one of the most powerful financial educational things that we did for them is that we created a bank account, and we gave them an outrageous interest rate. So every month they could go and open the book before computers, and they could see how much money they were making. And even though the interest, the amount of money wasn't much, they got so excited about that. So for me, again, it's teaching kids to deliver value. What would people like? And to be absolutely okay with taking those certificates of appreciation without guilt or a need to explain it or to defend it.
Yeah, I'll tell you a crazy story about. So I have 2 daughters, one age 15, one age 9, and I have this deal with my 15-year-old. So my 15-year-old has a very, very modest allowance, and usually when she needs money, she'll do some chores around the house, etc. And now she's getting at that age where she's going out with her friends all the time here and there, so she needs more and more money. And so back when she was 12, I told her that here's your bank. She has a bank account, and I told her, on your birthday, whatever is in your bank account, I will double it, right? Up to age 18. right? So on her 13th birthday, 14th, so on, up until
that's
18th
cruel.
I said, whatever is in your bank account, I will double it.
I love it.
Because my hope was that at some point, the light bulb will go on and she'll realize that, there's this thing called compound interest, and she can deposit, she can leave 50, or there's not spend $50, have that, in her bank account, and then that will turn into 100 and then 200 and then 400, whatever. And so we've been doing it now for 3 years, and it hasn't gone off yet. The light bulb has not gone off. And she knows it full well that, on her 16th birthday, whatever's in her bank account, I'm going to double it. And still, she just spends the money. But either way, I hope that whether she takes advantage or not, I hope that at some point she'll realize that was a good deal and I should have taken good advantage of it.
Yep. Well, I love that idea. And I'll steal it for maybe my grandkids. Ooh, that's a great idea. I love that. Thank you.
Yeah. Thanks, Richard. So tell us more, Richard. Where can people find out more about your book? Where can people buy your book? And can people reach you? What's the best way to reach you?
Sure. rich@mindmuscles.com is my email. And happy to talk and have a conversation with just about anybody on what they're interested in. And what I'm going to do is give your listeners a free online course that goes along with the book. If they go to conversations.money/moneyseed, that I'll have a special page for them there, and I'll tell them how to access the course online for free.
That's fantastic. And what can people hope to learn from this course?
Yeah, the course has the exercises from the book spelled out in detail. So there's about a dozen exercises, and each one of them deals with a major issue, belief, or worthiness around money. So you can actually gain the awareness through these exercises. One of them is really powerful. It's called the 3-chair exercise, where you have a conversation with money. We put something of value that represents money, and you just talk to it. And some of the conversations go, I'm so mad at you, I can never get you. You're always leaving me. I get a little bit of you, then you go. And the other ones are, oh my God, hey, come here, sweetheart. I love you. And then we have money talk to the person. And then we have them, as a wise observer, look at the dynamic. What is the dynamic between that person and money? And out of that, oftentimes comes a lot of wisdom that can be game-changing. So there's a dozen exercises like that, all available to your listeners.
Sounds fantastic. Richard, I will put all that information in the show notes. And thanks again very much for speaking with us today. It was a very interesting conversation, actually. And thanks again for your time. Any final words of inspiration, tips, advice?
Yeah, what if you were aware of your sensations, emotions, and thoughts, and you accepted them, accepted yourself, and were willing to learn and grow? How much pressure would that take off of your life? So, awareness, acceptance, and then how do you want to experience that?
That's powerful. It's a great way to end it. Richard,
okay.
Thanks again.
This has been a pleasure. Take care.